Welcome back to the Multifamily Mastery Podcast. This is the podcast where I take you on a journey into multifamily investing as a complete beginner and hopefully end up somewhere someday. I'm your host, Jonathan Zook, and once again, welcome. Today, I am super happy to have Marcus Long here on my podcast. Marcus, why don't you go ahead and introduce yourself?
Yeah, thanks for having me, man. I appreciate it, and good to see you again. So, as you mentioned, Marcus Long. Yeah, quick intro is just I uh, grew up in rural Missouri, spent about 21 years in the Navy, and I just transitioned out of the military about a year and a half ago, about 18 months ago. My final tour was in England. So, family, I have a 9 and 6-year-old and my wife, and moved the family back from England about 18 months ago. Live in the Kansas City area now, and I've been in kind of real estate, not necessarily always intentionally, but my first investment was when I was 22 years old. So I've had, real estate in my portfolio for a couple decades now. And that is kind of what I decided to kind of move into as I transitioned out of the military and, now focus on multifamily primarily and live in the Kansas City area.
Very nice, very nice. How would you say your time, your 20 years in the military was, and what were some of the biggest lessons that you learned in that time?
Oh man, yeah, I mean, we could be here for a few hours if I, talked about all the lessons and stuff. But it was, I mean, it was a great couple of decades. It certainly wasn't my intent or my plan to spend that long in the military. When I first went in, it was kind of, hey, I'll spend a few years, figure out what I want to do with my life, and do something else, right? And in reality, it opened up a lot of other opportunities. And the next thing I know, tour after tour after tour. Um, I continued to stay in. And, I had a lot of experiences from time on ships and submarines and working on admiral staffs and at the aerospace data facility. And I was an exchange officer to the United Kingdom. And so, I had a broad range of experiences. And I was talking to some people, a couple guys earlier today about this. And, sometimes when you're in those moments, there's a lot of pretty challenging times. You're deployed for X number of months, and it's not always the most glorious days. But then, when you look back at it after the fact, you have like a lot of good memories, and the people that you go through those experiences with are, end up being super close connections in many cases. And, as we'll probably chat about here in a little bit and stuff, like a lot of my investors today are people that I served with and connected with over the past, couple of decades. And so certainly a lot of good experiences, but for me and my family and stuff, at the age of my children, it was just the right time to kind of move on to something new.
Yeah. So speaking of that, something new, what do you do now?
Yeah, so as I kind of mentioned, my focus as I transitioned out was primarily in multifamily, commercial real estate. And how did that kind of come about? Some people are like, well, how did you make that transition from military to that? And the reality is like, as I got towards the end of my career, I had my daughter was very young, and there were some realizations that like I was at work a lot or I was gone a lot. And I was like, I need to make a transition so where I have more control over my calendar. And so as I looked at what that was going to be, I didn't really want to work like a 9 to 5, and so when I went to England for that last tour, I actually started investing passively some myself. I was like 4,000 miles away. I'd had single family rentals for a long time. And as I expected to travel while we were in Europe, I started investing passively, both private lending and multifamily. And as I did that, I got more familiar with the multifamily strategy, as well as like the power of being able to like passively invest. And so as I was looking at it, I was like, I don't want a 9 to 5. I don't want someone else controlling my calendar. And I chose kind of the multifamily strategy to focus on. And as I transitioned out of the military, and it's been pretty rewarding for me as I did that to be able to turn around and serve a lot of my peers, and offer those like multifamily opportunities to them, whether they're still on active duty or maybe they've transitioned into, you know, DoD contracting or something else. But many of them are still like overseas or various places around the U.S., work busy W-2s, things like that. And so for the past I started a couple years prior to getting out of the military. And for the past 18 months or so since I actually, transitioned out, that's been my primary focus is working on a team to, acquire like larger multifamily. Most of our properties are, plus or minus 100 units and stuff, and then sharing those opportunities with our passive investors.
Very nice. So you said that your primary investor base is other people from the military, correct?
As of right now, that's a large percentage, about 75%. My wife is also in the military, still is actually. She's been in for about 16 years, 17 years. And so between the two of us, and all the, in the military, we move around every 2 or 3 years. And so between two of us having, different assignments and the different people that we worked with, and as much as we move around and other people moving in and out, you end up having a fairly large network of military people. And so at least for the first few years, starting off, like that's been a large percentage of my investor network. Yes.
Hmm. So I don't remember the exact number for it, but there was a number of people that you wanted to that it was your goal to help this year. What was that number and how are you doing so far on that?
Yeah, that's good. Good memory. So yeah, at the beginning of the year, this goal that I kind of set out for was to help 50 new families passively invest in multifamily, right? And I'm kind of particular about that for a few reasons. I'll break that goal down a little bit um, for you so you know why I do it that way. So when I say like, to invest, to help 50 new families, like I like to set goals to like serve other people, to like help other people. But some of the underlying things drive some of the actions that I need to take, from a business perspective to make that happen. And so when I say like 50 new families, that means like, new, like not repeat investors. Like I want repeat investors. But as I continue to have deal flow and things like that, I need to take actions that drive growing my investor pool and stuff like that as well. And so that's the new part. Like if they're already investor, I don't count them towards that goal. I have other actions that I take to kind of drive the repeat investor portion. The other thing is, in order to achieve that goal, to help 50 new families, passively invest in real estate, I have to have deal flow, at least if they're investing in our opportunities. Like I can probably help somebody and they go invest in someone else's, but that's harder for me to track. So the metrics I use, I kind of look at people that invest in ours. And so in order to offer them that opportunity, I have to have deal flow, right? And so that drives actions for me to, either work with brokers and sellers myself or to work on the relationships with trusted partners that are bringing those deals and stuff as well. So that's kind of like the little bit of the background about how I structure, that goal. And some of, it sounds kind of simple, but some of the underlying meanings for me to do it. Um, as of right now, I mean, we're kind of at the end of just finished kind of the first quarter of the year. And I think this year I have like 7 or 8 like um, new investors. So, if you break down the 50, that's about 12 and a half. So a little bit, if you broke it down throughout the year, I'm a little short of where 25% would be. But sometimes those come in chunks, right? Like as we um, have a new deal. We're working on a couple new things in the pipeline right now, so it doesn't necessarily happen on like a weekly basis. You might have zero for the first 3 or 4 months, and then you have a chunk um, when you have a new deal that actually invest and stuff. So
Yeah, very nice. All right, just real quick for the people that may not know, explain capital raising and how to invest passively, just real quick.
yeah, I mean, so essentially capital raising, like the deals that we are doing are millions of dollars. And it doesn't have to be, you can do same similar stuff on single family, but in order to get scale and do like these larger deals, like myself and my partners don't necessarily want to, maybe we don't have the amount of capital, or we don't want to tie up all of our liquidity in a deal by ourselves. And so we do a lot of the active work to find the market, find the deal, negotiate, analyze, all that kind of stuff. but then a portion of the down payment and CapEx, same thing as if you were doing a single family house, right? If you're going to put 20% down or 30% down, some of that down payment, we might offer this opportunity in returns to passive investors, right? And so that action is like there's a lot of underlying actions when you're raising capital and stuff, but that's what we're doing, is raising capital for the deal. And then like to be a passive investor, often you are bringing capital to that deal. So you may not be, you don't necessarily have to be like looking for the deal. You don't have to be building relationships with brokers. You don't have to be underwriting the property. You don't have to be the one on the call with a property manager all of the time. That's why we say it's passive. You still have to do your own due diligence on the team, that you're trusting with your capital in the deal. But ultimately, you're bringing a lot of the capital to the investment, and you get a lot of the first returns and stuff, but you're more hands off than the active investors.
Yeah. Yeah, that's a great way to put it. Very, very enlightening. How has your experience in the past and in the military and everything translated to help you in multifamily?
Yeah, so I think that a couple of there's probably a lot of different lessons, but a couple of the quick ones that I think of often are just kind of a can-do attitude from the military. There's in the couple decades I was in, I think there's a lot of times that we are asked to execute a mission and maybe not being provided all of the resources, or not necessarily the optimal situation to execute that mission. And so I think we have a level of like resourcefulness of like figuring it out. Like we may not have all the tools and the resources we need, but we find someone else that does, or just find unique ways to like get things done. So I think that mentality and that attitude that a lot of us have translate well for not just multifamily, but entrepreneurship and stuff in general. Another one I think of is the kind of the ability to be flexible, and pivot, if you will. There's a lot of times in the military that we train, like you are expected to go to a certain area of the world on your deployment in 6 months or 9 months. And so you spend months and months and months training to go execute a certain kind of a mission, or to go, work in a certain part of the world. And, maybe a month before something, and there's world events that happen and military plans change, and you end up going somewhere different, or you do a different mission, right? And so you spend all this time preparing for one thing, and the situation changes. And I think that's similar, again, not just in multifamily, but in entrepreneurship and stuff in general, is that a lot of times we have this like perfect scenario, or this scenario that we think is going to happen, and we have to prepare for other things to come up, or to be able to shift. And so like saying, whether we're underwriting a property, like we have to take that into account ahead of time, or maybe we've already acquired the property, and things happen at the property, things happen with your property manager. And so to not necessarily be surprised when the unexpected happens, like it might not be what you expected, but you knew something was going to happen. You were prepared for unexpected things to happen. So I think those are a couple of the, from life in the military that translated to multifamily and entrepreneurship.
And those are some pretty good just overall life lessons as well. Like you got to be ready to change and adapt to whatever situation you find yourself in, because a lot of things happen and they're just completely out of your control, and you got to be able to do the best with what you've got. So yeah, that's great.
Yeah, 100%. Yeah, those aren't necessarily multifamily specific, whether it's entrepreneur life and stuff. It's just those are things that come up for all of us, that like how we deal with them um, impacts the direction that we go.
hmm Very true, very true. If someone wanted to take action today as a capital raiser, what would you say that the first thing that they should do be? Yeah.
Yeah, I mean, I think that, as I mentioned before, like right now, I've had real estate for 20 years. I've really only been, working on opportunities in which we raised capital and offered investment opportunities for probably the last like 3 to 4 years. So that's been more recent. Prior to that, I was doing a lot of single family stuff or smaller stuff with myself or with a couple partners, like more like joint venture style. And right now, as I mentioned, like about 75% of my investors are from the military. There's a handful of others that, are kind of family or, maybe friends from college and different things like that. But I think if you look at the people that have invested with me, the important part to look at is they are not all relationships that I made in the past 12 months or even 18 months, right? Many of them are people that I have known for years and years and years, right? Some of them I didn't, maybe I haven't really worked with or communicated with for 10, 12, 15 years. Um, but at some point in my military career or my wife's military career, we were connected. And so the reason I say that is that like relationships are really, really important, you know, particularly when you are starting off. Like at some point in time, you might get to a point where you're like doing institutional stuff or things like that. But particularly people like your age, um, or or even when you're like my age getting started into something where you're going to raise capital, relationships are really important. And so I think that's what I would say when you say like what to do now is what I would say is like invest in relationships, right? And don't expect that, someone that you are starting a relationship with today or that you are starting to invest in that relationship today, don't expect that they're going to rate, you're going to raise capital from them or they're going to invest one of your deals in 4, 5, or 6 months, right? It takes time for people to get educated. It takes time for people to get to know you, to have that trust level, that trust factor. And so just in general, like invest in relationships and see how you can like serve. And when you're investing in those relationships, like be intentional about listening to what their situation is and what they need. A lot of us, we like to talk about ourselves, but and so do other people. So, be intentional about like listening. And that way, like as you have opportunities and stuff, like you understand what people's situation is, you understand what their goals are, you understand what their needs are. And so that's not like it's hard to like put that in action like after this call, like you're gonna go do something, right? It's more of a thing that you have to put into action like each day. And it has to become kind of a lifestyle to be intentional about investing in relationships, investing in people and serving other people and listening to other people. And that stuff kind of compounds over time. Um, so it's hard to like say like, oh, I'm going to go raise capital and go out and be super successful at raising capital tomorrow, right? A lot of that comes after you've invested and spent time building relationships.
So, would you say that consistency and relationships are two of the some of the most important things when it comes to capital raising?
Yeah, 100%. I talked a lot about the relationships, but saying consistency like you did there is crucial because you can't just like whether it's social media or whether it's like calling somebody or going to a meetup or whatever it is, you can't just do those things like once in a while or once a month or whatever, right? Like it's a lot more important for you to take like small actions every day, call someone, text someone, go meet somebody, whatever it is, take these like small actions every day. And even though you don't always see the results on that day, that stuff like compounds. So yeah, the consistency is crucial as well.
Yeah, the compound and the exponential really clicks pretty well with me. So yeah, it's a great way to put it. All right. Last question from me. If you could give any advice to my generation and just younger people in general, what would it be? And that can
Yeah,
be life, real estate, whatever you choose.
yeah, I think that kind of as we were just talking about, like that, like consistency and like compounding effect is, I think, if there's something that someone wants to do, whether it's real estate, whether it's some other, dream or goal or whatever, is to is to start now and to take action now. right, is there's a lot of things in life where we can say like, someday I'm going to do this, or when the situation is right, I'm going to do this. And a lot of times, like the situation is never optimal for us to start doing that, or we get so tied up in our day-to-day stuff. And so I think, using kind of the real estate topic is like, even like yourself. I mean, it's a great example. Like, I see you at conferences, I see you like underwriting properties, I see you calling brokers, things like that. And maybe you don't have as much time, like if someone's in school, or if they're in a W-2 or whatever that is, maybe they don't have as much time in the day to do all of those things like I do, like if I'm working from home. But you have time every day to make one phone call, or you have time every day to, like look at one property, or, you have time every day to make one social media post to educate other people about real estate, whatever, right? And so whatever it is, like take some action today. And I think when you're that age, it is hard to appreciate the value of the time and the actions that you take. And even if it's not the right or the perfect action, like maybe you end up going down, like you try a strategy that isn't really the right strategy for you, like that's okay, right? You learn something from it. And you learn like, okay, wholesaling is not for me. Or you learn like, okay, flipping is not for me. Like whatever it is, you learn something, lessons from that, and you can shift and get one step closer to the direction that you need to go. And so that's just kind of like a real estate analogy, but that can be true of a lot of things in life. Like take some action, even if it's not perfect action, because you'll learn something from it and hopefully get closer to you know where you want to be.
Hmm. And even if whatever you try ends up failing, there's the experiences from it, the lessons that you learn from it that you can always go apply to something else. So,
I mean, 100%, like whether it's like for you to like try something else, and like even myself, like today, I think my lessons from 15 or 20 years of other real estate strategies serve me and serve my investors, right? Because I can help educate and teach them, and maybe there's a different strategy that's better for them than investing in mine. Or I can use some of my failed investments or something like that, to help them and stuff. And so there's value in all those lessons. So I guess to boil it down, it's like take action, do something small, um, every day.
yeah. And then it compounds and ends up being something great.
100%.
Yeah, that's the goal with all this. Hopefully in the future it'll all pan out. So, yeah,
Yeah.
I think that's about all I've got for you. If you want to add anything, feel free.
No, I mean, that's good. I appreciate the opportunity to come in and chat. And I think that, us talking about the compounding and, stuff is relevant right here with you. You doing this podcast, seeing you and some of the other people your age, like showing up at some of the events. It's true. I think it's inspiring for myself, and for others to see where you started or where you're starting, right? And you'll figure stuff out, like whether something is or is not for you, and the lessons you learn, and that's awesome. So yeah, if I can help anybody else out or whatever, I'm happy to do so.
Yeah. If people want to get in contact with you to throw money your way for a deal, how should they do that?
Well, I'm happy to offer them opportunities if we have one at the time, but even if I can help you in other ways, just chat about, any strategies or whatever that I've done and lessons learned, or time in the military, transitions, anything of that nature. Longlegacy.com, longlegacy.com is probably the best spot, one-stop shop. Has, my social media, my email, calendar, if you want to set up a call. Um, happy to chat.
Hmm. Yeah. Sweet. Sounds good. Also, in case you guys are wondering how we know each other, me and Marcus were part of Multifamily Live, the mastermind. Sadly, I'm no longer part of that, but this guy's still in there. So, yeah, I think that's about it.
Awesome, man. Appreciate it.
Yeah. Thank you very much for coming on, and I will see you guys next month.